Hey everyone, welcome to a Optimum FX weekly analysis. It's currently 11th of October today, 2021. It's about 8:45 where I am, so about 15 minutes until NY Open. Today I'll be analyzing our major currencies, going to be looking at commodities, just mainly gold, and be looking at the equity market also. But first, I'll be looking at what macroeconomic data is going to be released, and go back to the charts and map out potential trade ideas with the technical and fundamental confirms. So firstly, let's have a look at what is going to be released across our major economies this week. So we do have to keep in mind that today is a public holiday in the US, Columbus Day, and Canada. So we do have to be very wary that there's going to be a lot less volatility with those banks and institutions closed in that country, in those countries. So just to start the week, so on Tuesday we do have the bill auctions occurring, as well as job openings. On Wednesday, we do have plenty of volatility coming on Wednesday, which is going to be mainly CPI, and we're going to have FOMC minutes. FOMC minutes is only going to bring a lot of volatility if there are any amendments or revisions from the FOMC meeting had. We also have the monthly budget statement. We do have to keep in mind that October is the start of the fiscal month for the Treasury. We do have to keep that in mind, and we do have Fed member Brainard speaking subsequently to that, along with Bowman as well. On Thursday, we do have PPI numbers and continuing jobless claims, as per usual every week, and we do have crude oil stocks change as well, along with natural gas storage change as usual every week. And on Friday to end the week, we do have NY Empire State Manufacturing Index, along with our preliminary Michigan Consumer Sentiment Index, along with import and export price index. So with the import and export price index, realistically, it's just like preliminary trade balance numbers. And we do have retail sales. So retail sales is probably going to be one of the biggest things happening this week, because we'll be able to understand the consumer confidence within the US economy, and we'll have a better understanding from inflation, or from consumer price index, which is just inflation. So we'll have a very good understanding of the retail sales, from the CPI numbers being released early in the week. And just to let you know, just going through the latest PMI and ISM data being released, it actually, part of that data, it does mean, like, if you do go through it, part of the data, there is an index called like prices paid index, and since PMI and ISM have been edging down over the past month with decreased demand, because inflation went down last month only marginally, we can actually get a bit of a bias, like right now, that if those things have been edging down, especially prices paid index have been edging down, most likely CPI is going to continue to decrease, and overall retail sales will decrease as well. So we do have to keep that in mind. But if inflation does increase month over month, PPI increases month over month as well, there's a very good chance that we're going to see retail sales expand. So moving on to the UK, on Monday we do have quarterly GDP estimate, along with like-for-like retail sales. On Tuesday we do have claimant count rate, claimant count change, and ILO unemployment rate numbers. On Wednesday we got trade balance, which includes industrial, manufacturing, production, along with GDP numbers. And subsequently to that, we do have Bank of England member Cunliffe's speaking, and that's it for sterling. Moving on to Europe, we do have a bunch of ECB members speaking this week, but on Tuesday we do have the ZEW economic sentiment, And we do have industrial production being released on Wednesday and European Council meeting, along with trade balance numbers on Friday. To me, I do not know why trade balance is low impact when it's realistically, from my perspective, it's pretty important, because it's really good to know whether a economy is having a trade surplus or trade deficit. Whether there's going to be whether there has been more imports than exports, and realistically, this tells you the health of the economy's output and production levels. So moving on to Japan, we do have machine tool orders along with PPI. Again, I do not know why PPI is low impact, but it is what it is. I'm just saying, this is just my opinion. PPI is just what the producer is paying for goods and services. We do have money supply and machinery orders month over month, and we do have industrial production and capacity utilization numbers being released. Moving on to Canada, they don't really have much. All you got is just manufacturing sales on Thursday, so yeah, we shouldn't see too much volatility or any important data that's going to impact the Canadian dollar. If you do want to trade the Canadian dollar this week, I'll probably keep my eyes on oil, on the price of oil, and probably just use that as my main indicator or bias when getting some trade ideas. Next thing, so on Monday, so this is for Australia and China, we do have FDI, so foreign direct investment, along with new loans, money supply numbers late in Monday session, and we do have new home sales month over month in Australia. On Tuesday, we do have Westpac consumer confidence, and more importantly, in China, we do have trade balance numbers being released. So that is going to be very volatile, especially with the Australian dollar, the yuan, Chinese equities, Australian equities, and realistically, it's probably important to global equities because obviously, we all understand how important China is and their impact in regards to world trade. So pretty much every country has some sort of deal with China, some sort of deal with Chinese exporters. Okay, on Wednesday we do have a public holiday in China, and more importantly, in Australia we do have employment numbers coming out later in the day. We do have CPI inflation numbers being released, so we understand what macroeconomic data is going to be released this week. So very volatile for the US, and we do have some important data being released out of China, because as we do know, this is very impactful across our major currencies, especially Australian dollar and global equities. Okay, so moving on to the charts, as usual, always on the 4 hour, and I'm usually analyzing a risk currency against a safe haven. Very rarely I'll do a risk currency against a risk currency, but moving on, so I'm just going to quickly analyze the Australian dollar, analyze an order flow and potential trade ideas. So, with the Australian dollar, actually give me a sec, I forgot to add my Epic pen. So let me add this one. Give me a sec, I forgot about that. With the Australian dollar, after dipping down here, pushing further to the downside around the 800 level. Failures are honestly, I was really liking getting like a double bottom at 71 cents flat for some high risk, high reward buys. Unfortunately, we did not dig that deep. This was mainly from DXY fading from these highs here and just pushing further to the downside, which we actually did get a nice retest at this high time frame order block high. So moving on to Australian, so back to Australian dollar. So what I'm really seeing here with the Australian dollar is clearing above these this range here, because we knew last week roughly the higher time frame resistance or higher time frame order block high was around the 73-cent mark, and once we actually did retest the order block high, we actually did push further to the upside. So now when I'm looking at the Australian dollar, I'm really expecting us just to play back into this range, consolidate and potentially start to break and retest above. I'll be honest, my high time frame bias is still bearish, but at this point in time, I'm adapting to buys, because just analyzing the chart, analyzing the data that we have been released, I believe in the short term that we will pull to the upside with the Australian dollar and amongst our other risk currencies. Okay, to me, sells are going to be a lot more valid once we start to break and retest below the 73-cent mark, retest this previous order block high, and then push further down, and then possibly I want to target this previous price level and then target around here. Okay, so target the yearly low and push further to the downside. But like I was saying, you know, once we clear above these highs here, I can recognize this order block being formed on the higher time frame. You know, break and retests here, you know, we can target a nice like a nice 40 pip range to the upside, but I don't think we are going to push much further to the upside just with the current market sentiment that we do have at the moment, because the main thing that we're really looking at and understanding on a macroeconomic perspective is the Federal Reserve, you know, tapering soon, possibly as soon as November, which is next month. So we can see DXY start to appreciate from then, and we're expecting to see a Federal Reserve rate hike, sorry, bit of a tongue twister, rate hike by Q2 2022, so by June next year. So obviously those things are very bullish for the US dollar and very bearish for the Australian dollar. As we know, the Australian economy is still on lockdown, increased lockdown, increased restrictions. There have been talks and actually confirmations of easing restrictions, which is in time gonna increase revenue, increase consumer confidence, pretty much more money flowed in from the consumers to the producers, which results in economic growth in the short term for now. So obviously it's going to be in the long term if these rules stay put, but my main idea is that in the short term, you know, we can adapt to some buys once we clear above these highs here and snap back into this range and pull further up. So, but like I said, once we snap back into this previous low here, we can push further to the downside and adapt to some sells, and in the long term target these previous lows here. But like I was saying, you know, this is like just looking at the order flow, this is very bullish on the Australian dollar after, like, especially right now, breaking above these intraday highs. So that's what I'm looking at for the Australian dollar. Next thing I'll be looking is at the euro. So euro is very similar. It's showing a lot more bearish corrective structure. I'm not gonna lie, like there is a lot more clear bearish corrective structure. Probably what I'm looking at for euro at the moment is to see how we reject at this price level, which is about at 116 flat. I can identify that this is roughly our lows here. So this is like I like to mark the counterbody lows, because it's showing me that, you know, price close in that predetermined time frame. So what I'm seeing with euro dollar is potentially getting some high risk, high reward sells, targeting these previous lows, retesting and trading to the next high time frame key level. But potentially in the short term, if we do see some positive macroeconomic sentiment with the euro, I can potentially see it snapping back into this range and pulling further to the upside, and probably eyeing this little liquidity level at around 116,700, and potentially coming above here, grabbing liquidity, and that will be a make or break point, whether we get some strong high time frame rejections or potentially start to correct this bearish move and start to push further to the upside. But in order for that to happen, I need a lot more optimistic sentiment, you know, downplaying inflation, supply, you know, there's supply constraints, supply bottlenecks, all those rumors being phased out. Yeah, so that's probably what I'm looking at for the euro. So probably having a more optimistic sentiment from the ECB mainly. So yeah, that's probably what I'm seeing on euro at the moment. So yeah, we can definitely understand that we can potentially get some potential high risk, high risk, high reward sells at this liquidity level here, and then potentially push further to the downside. However, if we close, like ideally, the biggest thing about these levels is waiting for the high time frame candle to close. So high time frame, I mean like 30-minute, 1 hour, 4 hour, daily. Roughly to me, roughly like a 1 hour, like a 30-minute, 1 hour candle is enough for me, just to go for those trade ideas. So like I said, once you close above here, and if we get a solid retest, we can continue the buys up to this previous liquidity level. But then I want to close above here, retest, and come back up again. Because once you, like, realistically, when I talk about, you know, closing above or below a liquidity level, when I'm talking about liquidity levels, it's just a previous order block or previous accumulation phase. So once you close, so for instance here, you know, once we close above here, clear these highs, and have a higher time frame candle close above there, realistically that shows like a lot more buy side liquidity. And if there's a lot more buy side liquidity, then the probabilities of buys playing out and the probabilities of sells, you know, coming down, of like, they have diminished like completely, because you do have to understand, once you break above certain levels, like there's just a lot more liquidity, there's a lot more bullish, you know, momentum in that certain price range. So that's why it's important to understand where the candle body has closed. Like, I don't really, like, to me personally, I don't really give a damn whether wicks closed or where price went. My thing is, I want to know where price closed in that time. Like, I don't really care where price went, it's where price closed. Anyways, that's a bit of a gem, but you know, this is one thing I look at for my trades. So, whoops, that's the wrong button. So, next thing we can look at is sterling dollar. So sterling dollar has been very aggressive, and we did get some aggressive bounces at these lows here. So now, when I'm looking at sterling dollar, I'm really identifying these previous lows here, right? So I'm really identifying that. This is roughly our yearly low, and ideally what I really want to do, I'm identifying that. Okay, yeah, so realistically, once we break and retest above here, I do want to, like, honestly, I really do want to clear these highs here. Okay, I do want to come above here and push further to the upside. But to me, you know, roughly at this little price level here, you know, that's just going to be a very sensitive price level, and ideally price targets that you want to probably go for. But in order for longs to be confirmed, ideally I do want to break and retest, mainly just close and retest at this liquidity level, which is a psychological price level at 136,500, and then probably target these previous lows here. But honestly, I'd like to be a bit safer. I'd probably want to just target this little price level. Okay, so that's about 137,400. So that's one price I'd be looking to target. However, if we do start to correct this move, we can take some corrective shorts once we close below here. Target these lows here. It's a very small range, and it potentially, I'd probably want to target this price level. Okay, probably want to target 135,800. That'll be a good trade to follow, and then targeting the yearly lows. But I'm not really emphasizing, you know, any strong shorts on sterling dollar, and I'll tell you why. So over the weekend, we did have a bunch of Bank of England members talking about hiking interest rates as soon as the end of this year. So what does that mean for the sterling? What does that mean for UK equities? Okay, for sterling, it's very bullish for the currency. Very, very bullish for the currency. Equities, majority equities, except for lending and bank corporations, they're going to take a hit, because if they hike the interest rates, most likely, well, the lending rates are going to increase, which decreases, you know, businesses' revenues. I mean, it's great for the sterling dollar, because the sterling dollar is a lot more attractive to foreign investors, and they'd feel a lot more confidence in getting a much higher return when the cash rate is a lot higher than compared to the other major economies. So realistically, I mean, in the short term, I'm really liking these buys. So to me, that's a very optimistic headline, and I'm really liking how we're nearly correcting this initial downside move. Okay, so we've nearly corrected this move here. Once we break and retest above here, we can definitely target this key level here, and then potentially snap back into this previous range, and then we could potentially, clear above these highs, and then you probably want to clear above these highs as well. So that's what I'm looking at on sterling dollar. GJ's been on a mission, and I'm not gonna lie. Last week we had some clean moves on GJ. Fortunately, I didn't capitalize on them. I was focusing on some other markets, but it is what it is. So GJ's been really clean. After we did have an aggressive triple bottom, eventually we have been steadily chugging to the upside with a lot more weakness being shown on the Japanese yen, with a lot of Bank of Japan members just downplaying the current health of the economy, saying that there's still a lot of uncertainties surrounding the COVID Delta variant, which is why we've seen a strong pullback on Japanese equities. So anyway, probably not many of you really care about the fundamental catalysts or fundamental reasonings as to why this market has been appreciating or depreciating, but just to map out some potential trade ideas with the optimism from the Bank of England and the pessimistic headlines from the Bank of Japan, we can definitely say that we have cleared above these highs. We did give it nice retest at the intraday highs here, and we did push further to the upside. So now probably I probably do want to get a nice retest and see if we can get a nice counterbody support being formed at 153 300. So push down for some medium risk buys and push further to the upside, clear these highs, retest, and continue to push above. Okay, however, once we break and retest below here, we're only going to see that if we see if we see some weak UK retail sales or claimant count numbers. So yeah, that's probably the biggest thing with sterling at the moment. However, if you close below here, we can retest and push further to the downside, potentially grab liquidity in the short term, and potentially push back up. So that's probably one thing I'm looking at, but to me, I'm very bullish on GJ at this point in time. So I don't really have much of a reason just to sell GJ right now. I probably just want to see a higher time frame counterbody support being formed, or like a high time frame or order block being formed, and then it'd just be a lot more safer just to trade the breakout. But I'm just identifying these significant price levels where we can potentially have the trades with the technical and the fundamental confirms. So next thing is USDCAD. So USDCAD has been moved to the downside, and especially with a lot of money being outflowed from Dixie and more into risk currencies. And we do have to keep in mind that oil is trading at about $80 a barrel. So that's why we're seeing USDCAD fall further to the downside. So now what I'm really liking is that we actually did trade below the significant price level, but now I'm looking if we can break and retest below here, because roughly we're at this little price level at the moment, but I'm looking at these lows here. Okay, so to me, once you retest these lows here, they are good sells, very good sells. And realistically, I'll be targeting these previous lows here. So that's about 124.200, and this is a potential 90 pip play on USDCAD to push further to the downside. So that's what I'm looking at the moment. However, if we do see a nice counterbody support being formed, I don't really see any buys at the moment. To me, you're catching a falling knife if you really want to take some buys, but some high risk buys here would be if we generate a nice high time frame counterbody support here and potentially push up, break and retest and snap back into this range. But that's really only going to happen if we see Dixie start to appreciate and we see a lot of money being outflow from the Canadian dollar, because as we know, there's not much there's like no macroeconomic data being released. I think only manufacturing sales, I believe, or industrial production, one of them. Yeah, so they're the only things that could create, I guess, more volatility with the Canadian dollar. But yeah, so that's probably a very good trade idea that I'm seeing. Like that's showing me some very good probabilities for some shorts on USDCAD. So moving on, let's go to Dixie, one of the most important charts to look at in my opinion. So it was seen with Dixie, you know, we did see this like strong rally up and push to the upside due to the optimistic Fed. Did clear above these intraday highs. We did fail to break, but once we actually did push, we didn't give like a solid retest, but we just like rallied and pumped to the upside. And this was also due to, you know, some fear in the market, but you know, we did have, you know, a lot of, you know, optimistic headlines from the Federal Reserve talking about tapering as soon as in a couple of months, and hiking rates as soon as Q2 2022. So now what I'm really seeing is on the lower time frame a bearish corrective structure being formed. So I'm really seeing that, and probably once we fail to break and retest above 94,200, which in 2 hours we'll probably have a very good indication once this 4 hour closes, and this 4 hour closes about 1 hour into NY. So yeah, this will be a very key candle just to watch out for. And then once we clear below these lows here, potentially retest, come down here, probably see a bit of liquidity being formed at this price level, push further down, eyeing these previous lows, we can push further to the downside, okay, and then retest roughly 93,600. But you're really only going to see that if we do see some weak US data. You know, we get weak jobless claims, we get weak inflation numbers and so forth. Like that's probably one of the main ways that, you know, Dixie can start to fade. But to me, I think this is just a pullback. I believe, yeah, this is just a pullback. Like to me, I'd be only taking some long-term sells once we close below 93,800. Okay, and realistically, I do want to see how we close around just, I think, 94,100. I do want to see how we react to this price level, because I can tell that there's a lot of liquidity sitting at this price. So moving on, quickly, we'll just quickly go through gold. So gold just been in this bit of a high time frame consolidation phase, roughly at these lows here, and I'd probably say, yeah, I'd probably just say these highs here. We did actually push further to the upside, which was mainly due to weak employment numbers, which eventually did get faded out. And the easiest trades for me to take would be once we break and retest below here. But to me, you're most likely going to see that come inflation. So when the CPI numbers gets released, this will be a very good trade of gold. If inflation is weak, I probably want to target this. Probably want to target this price level here. Yeah, probably want to target here, retest below here, come here, and potentially come down to here. Okay, come down. But that is, I mean, that is a very strong potential. So yeah, I'm still bearish on gold at the moment, just because, you know, after we did fail to break above these highs, we've just been on a strong bearish corrective structure. I know this is pretty much broken our technical trend line, but roughly right now, if I'm adapting to price and looking at price action, we're just in a bit of a high time frame order block, and once you break and retest below here, those sells are going to be solid. But then Dixie needs to bounce from the current. Dixie will probably have to reject from 94,100. Yeah, Dixie will have to reject from 94,100 for that to happen. And here's the thing, gold will start to sell off if inflation is low. Okay, it will increase inflation is high, but if inflation is low, gold will come to the downside, because we know that investors pull money into gold as a hedge against inflation, as against high inflation. So really one thing I'm seeing on gold. Next thing is hope this video isn't going for too long. I don't want to go for too long. So next thing is Dow Jones. Okay, so with Dow Jones at the moment, we have had some pretty much aggressive dips. You know, as you know, do not bet against the US economy. Do not bet against the Feds. Please don't. Please don't ever, unless you have some good reasoning to. But like I was saying, like to me, I mean, the stock market's still bullish, like still bullish AF. Still bullish AF, but to me right now, I probably want to see how we react, probably at this little price level here. See if we can generate a nice high time frame candle body support, push further to the upside. However, we can potentially dig a bit deeper, come down to here, start to consolidate, break and retest above here. Then I want to clear above these highs, retest, and come back to the all-time highs. Okay, but I know I know historically there's a seasonal tendency for the stock market to sell off in September. I'll tell you why. So my reasoning behind that is because the Treasury's fiscal year starts on October. So to me, it just makes sense. Like, it makes sense on an order flow perspective, because we do have to realize a lot of companies and organizations are closing off the trades to reap their profits, okay, to get ready for the new fiscal year and realistically get ready for Q4. So that's my main reason as to why historically the stock market sells off in September. Yeah, I mean, and then you got this fear catalyst, and I don't know, to me it's all priced in and it's all by design, but you can always adapt to it. So that's just my bias and my idea behind it all. So anyways, that's probably what I'm looking at for Dow Jones at the moment. I don't really think we are going to push further to the downside. Yeah, I mean, the only, like, realistically, we might, you know, come back down to this previous lows here, but that's most likely once tapering is confirmed. Once tapering is confirmed, like, this is just going to push further down, like 100%. Like, a lot of money is just going to be flowed out, and then ideally, I want to break and retest below here, come down to me, because I'm just looking at this previous liquidity levels, right? You know, we got these highs here, these previous lows here, low high time frame. Or order block low being formed here, and yeah, so realistically, you know, we can dig a bit deeper, possibly to even 30. Like, to me, I wouldn't be surprised if we dig down to 30k like next year once we get our hike rates confirmed, and tapering is continue to roll out, which will be a 20% correction from the highs, roughly, which will set up some very good buys. So it's probably what I'm looking at for Dow Jones at the moment, US30. Okay, now I think it's very important just to look at. I'll quickly go over it. Don't want to go into too much detail, but we're just going to analyze our global equities. So I've got, you know, Dow Jones, NAS, Aussie 200, China 50, German 30, or DAX 30, Euro 50. FTSE, which is the UK index, and Japan. So as we can see, you know, we've just been on this high time frame bearish corrective structure across our major global equities. We've seen China just pull back. It is now trading about just under 16k after bouncing from these lows around 14,500. So yeah, so we've seen a lot more optimism throughout the Chinese economy. In the short term, I'm not, like, to me, overall, like, we're still bearish. Probably want to stay above, I want to stay above 15,550 for some continuation buys, and eventually correct this initial downside move, come back up to like 16,600. Okay, German 30, you know, still bearish. It's just in the short term, we're just bearish, correcting from these highs, because we do have, you know, we still got fear in the market, but then we also have the Federal Reserve, which every equity market follows, every country follows, okay? Because every country follows the Federal Reserve. Doesn't matter. Like, it doesn't matter. They will always follow the Federal Reserve. So, you know, we're just seeing on the lower time frame, or in the short term, that we're just in this bearish corrective structure. So the UK index is starting to pull back up. I probably want to clear above essentially the price level that we're at the moment, so around 71.20, clear above here, target roughly 7200, then target 7230, which is the all-time highs, I believe. Yeah, so EU50 has been coming to the downside, so yeah, yeah, I mean overall, yeah, it's just a bit of a lower time frame bearish corrective structure. But we do have to keep in mind that the Federal Reserve will be tapering soon, so that is going to, provide a more of a deeper pullback for our equity markets. And we've seen Japanese stock market take a big fall. This is probably mainly due to, very pessimistic headlines from the Bank of Japan and continued supply chain disruptions, which is seen a lot more outflow out of the Japanese stock market. So anyway, this has been the weekly analysis. If you enjoyed the video, please feel free to like, share. If you got any questions, feel free to leave a comment down below. So hope you enjoyed the video. Thanks.